I want to bring up the commodity trade because we referenced it earlier. Those commodity prices have ebbed and kind of flowed along with every new headline that comes out of the China reopening story, crude oil coming off its worst week in months, and then gold regaining some of its luster. But overall, there are still high hopes for a full-fledged reopening sometime after the spring, which would be possibly a net positive for assets like copper, like oil. But given all the worries out there about a recession in 2023, we have these conflicting crosscurrents very much at play here. So let's drill down, pun intended, on the commodities complex. Will, we'll start with you here. You run several big commodities-linked ETFs like the Granite Shares Gold Trust. The ticker there is BAR for bar. What's your sense on where some of these precious metals prices will be in 2023? Can they continue to see some of the maybe upward momentum that we saw in the second half of this year?
I think that we can, and large amount was based upon interest rates for the more interest rate sensitive commodities such as gold. And I think with the dollar seemingly peaked, at least short term, whether it's an absolute peak, we don't know, of course. But I think that some of those expectations are coming down, allowing metals like gold to appreciate. But metals, we're going to need them. They're absolutely vital for this energy transition that every major government in the world is talking about. We need more copper, we need more nickel, we need all of these metals which are going to help transition away from fossil fuels. So I think this is a longer-term secular bull market for commodities, but in particular, commodities that will be used to hasten this transition away from fossil fuels. But that doesn't mean that there's not opportunity for oil and for some of the traditional, certainly hydrocarbons as well, but they will definitely be battling against these recessionary forces and, stimulation from the likes of China, I think, the next year.
Tom, where are we in that so-called peak inflation narrative, that story? And how exactly do you view the commodities industry right now? And how do you reconcile all of these conflicting cross currents? I only ask this because you'd think when inflation fears are high that you'd see oil prices rising, but they've been falling. What gives?
Yeah. We're surveying advisors all the time, Dom, and in the last couple of years, their number one concern has been inflation. It's nice to see a little bit of a pullback, but really, when you look to the next 3 to 5 years, we may be in higher inflationary times, which tends to bode well for commodities. To Will's point, even if we have a soft landing and we come out of a very tepid recession and we get back to that growth stage, whether we're building more, which we will be, or we're going to be transitioning away from fossil fuel, we need commodities. It comes down to a supply and demand issue. And one area, gold just hasn't done as expected in the last couple of years. It's been quite surprising. However, historically, if you look back, it tends to be a second half player. It tends to really kick in during the later years of an inflationary period. So look, don't count commodities out. If you don't have it in your portfolio, don't feel like you've missed it. There's only so many bars of gold and barrels of oil that we can pull out of the ground. So if you look at it from a supply and demand standpoint, it makes sense. And there's some great commodity ETFs out there, like the folks at Granite Shares are offering, at the right price. So now's the time, as people are adjusting portfolios, when you look at what you have in the portfolio, you've got to make sure you're diversified.
All right, we got a couple seconds left here. I'm going to give 2 quick words to you to end the program today. Will, we'll start with you. The same question for you both. What's the biggest wild card for the ETF business in 2023?
Wow, that's a great question. I think the wild card would be active performance coming back in a major way, so active management coming back into vogue, and perhaps putting the cat among the proverbial pigeons in terms of people's one-way directional view on ETFs or passive always being superior.
All right, so that's active versus passive. What do you think, Tom?
Yeah, I would say equities coming back, surprising folks, but also being creative with these options overlay strategies, because there's that demand for yield. However, the Fed may continue to raise rates well into 24.